Hello, Culture Matters podcast. Ready for the big event? Before I introduce you to co-host for today's episode, here's a quote just for this podcast. The big money is not in the buying or selling, but in the waiting. Charles T. Munger.
How you
Episode.
going, Jay?
Well, hello. I
I'm cutting you off. I thought we were going there. Sorry,
That's
mate. You
perfect.
go.
It's perfect. Oh man. Today I'm joined by co-host of the Value Investor Series, the one and only Aleck Arena, Arena Securities, who's contributed to the Culture Matters podcast, episodes 221. Man, 336, 470, 575, 609, 557. 850, 892, 963, 864, 1003, 1004, 899, 745, 1009, 796, 857. It would have been nice if I put them in order. 1038. Those are the ones I could find. I think we're climbing.
Nah, it couldn't be more, mate. Yeah,
Today we're
you
back
must
with
love.
part two of your update for Arena Securities. Quarterlies? Is that the
Yeah,
quarterly?
yeah. This is just quarterly. I no, I'm not really into monthly reports, mate. No, my shareholders, if they've got any questions or problems, they can always come in and see what the portfolio is worth on any given day. As long as I'm home and in the country. If not, I'm sure I can tell them what their portfolio is worth. They just physically can't see the brokerage account. I always try to do the best possible for my shareholders, but I think a quarterly report is probably better than a monthly report. I think the monthly report would give way too much information to like it would just be effectively data points, and there wouldn't be enough to write about fundamentally what's changed in the portfolio. It would literally be like a bullet point every company, and I think that would just be a waste of my time. And if you're wasting my time, you're wasting the shareholders' capital effectively because you're getting paid by your shareholders. Um, so yeah, that's why I don't do monthly reports, and that's why I find quarterly is a better format. But yeah, I can fill the listeners in on the last two reports we had. Sorry, the last two shares we had on the quarterly report. So yeah, there was a share called Osco. Um, it's a medical devices company, and I probably I bought shares about a year ago. Company's done quite well. It's nearly doubled. Effectively, there was an old CEO selling down a bunch of stock. He'd retired, and there was a new guy that took over, was doing really, really well. They were kind of this company was it struggled during COVID because it's a medical devices company. So if you got to go to a nursing home or you got to go to a hospital, usually the TV remote is connected to the bed, and on the TV remote you can call for help as well for if you need a nurse or nurse assistance. If you go to the bathroom, if it's got a private bathroom, there's also a call for help button in there. There might be sensors on the floor. Um, that you can lift your bed from the floor as well using their device pretty much. So it's it's a company that's deep rooted into, I would say, the healthcare system kind of around the world. They do have competitors, and the new manager was doing, the new CEO was doing extremely well. I was a bit skeptical because effectively there's a product cycle here, Jay. So they like sell the new units, and then after that, there's it's like when they cut, it's like kind of like Apple's not that cyclical, but it's as if Apple was to bring out a new iPhone, sales would go through the roof for like a year, year and a half. But after that, there's only so many people that could have bought the new iPhone. And then they make a bit of money doing a bunch of maintenance stuff, um, which is all good and all necessary. But there's kind of a bit of a product cycle. But yeah, Oscar's done really, really well. And I think a reason for it also is that Trump bought a few tariffs in this year, was trying to. You might have heard about it being American. Um, and the Oscar management team back probably about 10 years ago now, they diversified their manufacturing facility. So instead of having it solely based in China like all their other competitors, I'm pretty sure they made a facility in Malaysia. I might be slightly wrong there, but it's in that kind of Asia Pacific area. And the manufacturing cost was slightly higher. But if they were having any supply chain problems in China for any reason, they could always manufacture a bit of their like a they could manufacture a reasonable chunk of their production in this Malaysian facility. Um, and I think that really helped them where the tariffs came in because the tariff amount it was purposely done for a situation like this. So when Trump put an insane tariff on China, they went great. So now all of our competitors only have manufacturing facilities in China. We'll service the US market from Malaysia. So so the Malaysia facility cranks up a bit, and all the production going into the US comes straight out of Malaysia. Um, and that gives them a leg up on their competitors because their competitors are only producing out of China and they have to pay a bigger tariff. So then their cost of goods went up slightly, but their competitors' cost went up a lot. Like if you were to buy the competitors' items. Sorry, Jay, there's a little thumbs up that keeps popping up on the bottom of the screen. What's going on there, mate? It's
I was
blue.
sneezing a lot. I think, I don't know. I don't see it.
I'm being dead serious. It's all good, mate.
Is
It
it
looks like
still coming
it's gone
up?
away now.
Okay.
No, no, it's gone away now. I don't know what you're doing to me, Jay.
Just
It
taking
was great to
notes.
see you like it. You like what I was talking about. It's like you're spamming the thumbs up button. Yeah, so they've done really well out of their manufacturing facility in Malaysia, and obviously for the rest of the world, their manufacturing stuff still out of China, but they're selling to the Americans through this Malaysian facility. And sales in North America has gone really well, and sales in pretty much all the other markets are going pretty okay. They also did an acquisition, so they bought a New Zealand-based company out, and um, that's they've done decently well out of that. So this year they had revenue growth of 40%, but that wasn't all organic revenue growth. And a fair chunk of that drops to the bottom line. Their bottom line was slightly affected because there was earnout payments going to the New Zealand business. So effectively, if the New Zealand business performed really well, they had to pay that former management team slightly more money for their business, Jay. And that business performed really well. So now next year, that should drop through the bottom line, but they had to pay a slightly higher price than they thought they were going to have to pay for that business. So yeah, their profitability was affected by that. But I think on a normal good year, I reckon the business can make about 10.5 million Australian dollars after tax, which is pretty good because it's only a micro cap share. And um, yeah, it'd be probably slightly under fairly valued right now. I'll just check roughly what it would trade on from a market cap basis because I don't have an insane memory. So it's the market cap right now is 163 million Australian dollars. Um, and based on a profitability of $10.5 million, I think it should trade close to about 20 times earnings. So I still think there could be a 50% upside to this stock currently, um, which is pretty handy. But yeah, I think most of the good buying opportunity in this company was a year ago when liquidity was coming from that old CEO, and I was able to buy stock uh, at a discount and get some volume behind it. At the time, I wasn't managing as much money, so obviously, if it was today, I would have bought more stock. So it's slightly underweight in the portfolio because the portfolio's performed really well. And that's Oscar. If you want to ask me any questions about him, happy to answer any questions. And then we'll move on to the next position.
What's been your, how long have you had it?
I've only had Oscar for a year. Because it's a medical devices company, Jay, I've known about it really since 2018. And I've followed it since then. Was very interested during COVID. Didn't The thesis didn't really play out. I lost a bit of faith in management. The management team changed, and then honestly, Luke Winchester and Ben Sayers from Newcastle, they're both from UE actually. They said to me, "Oh, the store it's changed. Like the company's changed. They're inflecting into profitability now. It's like the results are looking pretty decent. Um, they're probably scaling is the wrong word, but you could just see improvement on a unit economic basis, which is yeah, effectively the company was selling more of their products, and it went from kind of a goner company to a company that was actually the management team was saying they were going to do this, and it was actually being met and it was being done. So yeah, they convinced me to take a fresh look at it, and I'm pretty thankful they did convince me to take a fresh look at it because yeah, it turned out to be a pretty good buy for Arena Securities. And yeah, that's that's all I can add.
How many years had you been researching up to?
7 years, mate, but I kind of oh sorry, six because I was 2024 when I bought it. Um, Yeah, but I kind of took a break, if that makes any sense. So I was like, oh, this isn't going to be anything amazing, and I kept a little bit of an eye on it. Would occasionally read for announcements, read the annual report, but I wouldn't read like straight away when it's dropped. I'd read the annual report of
How,
shares that I owned at the time, and then get back to it and read it a month later. Um, but I still kind of slowly followed it in real time, if that makes any sense. It wasn't my number one priority, but it was on my list of micro caps that I watched. And
how
yeah,
long do you think the average value investor follows a company before they buy?
I don't really have an answer for you. The reason is
It-
because it's different for everyone because a lot of people's processes are different. If you're talking about Warren Buffett, I reckon it'd probably be like these days, like let's say Warren Buffett like 5 years ago, I think it'd be at least 10 to 15 years or something, so insane time period. When he was my age, he was just doing a similar thing to what I was doing, and I think he would have gone back and read all the annual reports for like the last 10 plus years to get it. But
So
I reckon maybe 2 years in real time
he's
is what he was
really,
doing.
when you do the research, it's helping piecemeal together, of course, the stories to really understand the business. Like if you were to understand a person, if a psychologist is working with a patient, to really understand. Yeah, I'm just using an analogy that I can conceptualize as a advisor. Something that stands out that's interesting to me that I want to ask about is there must what do you what's how much value is there in just staying keeping track of the companies, things you might have forgotten about or they pop up and it's like, wow, this it's so it seems like,
Um,
in sales, you got to follow up with people.
yeah, pretty much the same thing. That's why I have a job. the share market, like doing my job is such a weird thing. So I'm getting paid for doing work. Yeah, I'm gonna get paid in 4 years for doing work today. It's
Yeah.
really weird.
No, because I'm noticing 10 years into Culture Matters, there are people that like it's starting to like we may, relationship for 10 years, you never work together, and then it just makes sense. It's staying in touch with people is so important. Staying in touch with companies is so important to you. It's 7 years,
Yeah,
saying
that
six
doesn't mean I
years
need to.
of looking at a company.
Yeah, that doesn't mean I need to reach out and speak to the management teams. But it does mean I can, like, I'll read annual reports
Yeah.
and do the research and do all that stuff.
Oh,
But yeah, I won't.
okay.
If I'm not that interested in a company, you won't find me reaching out to the CFO or the CEO or the chief operating officer or anything like that. I'll just be plugging away doing my work. If you're a Perth-based company, I'll probably get down there to the AGM and still speak to the management team. I think a lot of um, Perth-based management teams think when they see me walk through the door, like, what is this guy doing here? He's always interested in my stock, but he probably hasn't bought it yet. And he's always asked me questions and all that. And that's just, I'm compounding knowledge. I'm compounding knowledge on them and I'm compounding knowledge on the companies because, yeah, I don't know. It's important what a person says and then what a person does. They're sometimes two different things. And it's important to note that and think about that. Yeah, hopefully no one changes because I've just said that in the public domain. But yeah, mate, doing the work's important, eh?
So, what's has this investment taught you anything about yourself?
This investment, nah, it's probably just what's the word? Um, it's like it's compounded. It's just nailed. It's nailed down to me, or it's just it's reiterated the same thoughts I already had, and yeah, just do the work, and then it might be useful in 3 to 4 years, or you might never buy the stock, and it's always hard because it's like you used to have to do a lot of work and a lot of shit. I mean, that's I'm sorry for swearing and all that, but I haven't. It's kind of that simple. You have to just that's what you do. You spread yourself out, not too thin, but you spread yourself out and try to do decent work in a bunch of companies and then yeah, it could be useful someday. And you obviously want to try to get it right where the work you're doing will be useful in 3 to 4 years or in a few years. But if it's not, it's not. It's hard luck, I suppose. You can't get paid for all the. Do you get what I mean? You can't get paid for all the work you do. In my industry, you can't get paid for all the work you do doing my job. If you're a stockbroker or something else, you can probably get paid, but not doing my job, you can't get paid.
You think many of the dividends one doesn't see for decades. So, for example,
Yeah.
uh, uh, I just maybe just to digress for a moment, didn't Berkshire just pick up Alphabet, or is that just buzz PR?
No, no, I think they did. I don't know too well. My cousin from America, I was speaking to him last night. He said, "Did you see they just bought a few Alphabet shares?" And I said, "Oh, that would make a lot of sense because um, I know Alphabet's kind of lags the Magnificent Seven, and I don't know a lot of the thesis. I've heard a lot of people saying that like Alphabet's dead. And just so people know what Alphabet is, it's effectively Google and YouTube. And a lot of people seem to think it's going to die because of ChatGPT. But effectively, ChatGPT pulls stuff off the internet, and Google's still the main search engine that anyone uses. So it's kind of starting to become a value investment. It's
Wow.
like a very weird value investment because it's for them, they're going, no, this is going to die a lot slower than everyone else thinks and ChatGPT still using it for a bit for information. And then there's the business behind it, which is YouTube. And YouTube, YouTube's just like
Interesting.
YouTube is such a force, Jay. It's like it's modern day media at its finest, but it's such a weird. It's got
Yeah, yeah,
really
yeah.
weird
Ooh.
unit economics because like
It's the
it's like
platform for the new capitalism.
yeah, yeah, but just think about it being like a content creator chucking stuff on YouTube. You're effectively like a busker, and people are liking and viewing your videos and all that. But you start off on such a low base, and then you get bigger, and then obviously YouTube chucks some ads over your videos, and then they give you a slight. Sorry, Jay, you look like you're gonna.
Keep going.
Jay looked like he was gonna have a heart attack, and I
I've
was like,
been
oh, Jesus.
because I've been the architecture for the ism. That's not any ism. This is my philosophy, okay? The ism of the 22nd century that doesn't yet there isn't language for it doesn't yet exist in our in culture, human culture. The ism, so there's capitalism, socialism, communism, the different structures of economic Marxism, the economic theories,
Yeah,
they're going to follow the technological and cultural, biological intermeshing. So like a YouTube, I'll give you an example. So like I have Das Kapital downstairs, and Marx has these three books about capitalism, and his one of his points is about alienation and basically the business. You and I have talked about it all the time. Like, the people come in and then they leave. That's the business. The people. Well, just take out everything we've ever looked at around business. What if, the organization, it's just a human being that's the business, not there's idea, concepts, like there's products, services, there's this whole org chart that's reflected around it. Like the human being is that quote Jay-Z, I'm a businessman. I'm not a business. I'm a business. I'm not a businessman. I'm a business man. So where I'm going with this is these YouTubes, right? Like us, we're having this conversation.
mm,
We have this conversation, and like 1,000 of these conversations, attention is on us. There's value. The business just is created naturally, organically after. It's not like the first it's the business, then us, where it's us and then the business. These YouTube these technologies that it's going to completely. This is my thing. Com, it's laying the foundation for the next ism. It's not capitalism, it's not communism, it's some ism that doesn't yet exist. So my um speculation, this is like the biggest
yeah.
speculation ever on the history of any of the episodes we've ever done at the worst possible time. I'm ru- I'm hijacking your update. I'm sorry. But
No,
my
no,
yeah, I feel like I'm hijacking the update. Um
it's all good. I'm not sure if I understand where you're coming from, but I'm not sure I agree with you, obviously, because I
I don't
believe
even
that
know what I'm
YouTube
talking
is.
about. I don't. I'm just thinking. I've been
I get,
thinking about this for a while. So
yeah. So Jay's kind of trying to refer to like the media approach of what YouTube kind of actually is, the philosophies and all that behind it. And I'm just kind of coming from point of view that YouTube's a pretty legit business, and companies they pay YouTube money so they can advertise on content creators' videos. And then YouTube, depending on how big they are and how many views they've had and how consistently that happens, I think they pay them uh 5 to like 15 cents per thousand view or something. It's not extremely lucrative. Like you need to be a really big YouTuber to make like an okay amount of money. I don't know, Jay, can you Google that while I'm speaking to make sure I've got the stats? But it's like
I like that. Yeah.
if you're a modern day, if you were media back like 10,
Well,
15
I'm
years
using a
ago,
knowledge base to do it, but it's drawing the data from Google, you're saying the internet. I'm going to use I use my AI to,
That's
as I look up things on podcasts, I'm always using knowledge bases that I build.
that's
Like,
fine.
yeah, I'm just saying that
Yeah.
just to add to the conversation, I'm using ChatGPT 5. I love it. It's
Oh,
unbelievable. I'm
mate,
constantly,
Jay's flexing on you that he's paying for ChatGPT.
I don't know what it is. I should know how much.
I think
It's been very good for the
it'd be
business.
about 20, it'd be $20 a month, but I don't know which plan you're on. That's just a basic plan. There's business plans that are more expensive and bigger, but more devices are included. But yeah,
Interesting.
obviously ChatGPT has been a great profit maker for Microsoft. If anyone doesn't know who actually owns ChatGPT, um, then yeah, I think Microsoft does that very well of like spending money to better the company and create future cash flows, and as well picking off other little businesses in the tech industry. Um, yeah, they actually got in trouble the other day, old Microsoft in Australia.
So it really feels painful to think that, 10 years ago, I didn't buy Microsoft. So how do you advise our listeners to not let regret lead to emotional swings of overconfidence on decisions today? So, let's say I live in regret. I didn't buy Microsoft 10 years ago. In my senior year of my second high school, I was like, I wanted to own Tesla. I had 20 grand and I didn't buy it, and it would be 2.4 million today. And so now I'm
Mm,
going to take 200,000 and buy this obscure
bit of
thing.
FOMO.
Now I feel
Yeah.
like it's the thing. How do you advise people to process these, whatever it is about the human psyche that
Yeah.
leads to that type of behavior? I know we'll come back, but
Should we? I was just gonna say, should we end the podcast here, or should we call David? Because you probably got the wrong person, mate.
that's actually funny. Yeah, I know
You'd
David's a
probably.
great mentor. I'm sure he'd have a good answer on that.
Yeah, because it was just last night. I was at my grandparents' house, and they were recently went to South Australia. Shout out Nonna Arena, and Nonna took a few photos of their trip, and they went to Kangaroo Island, and they got on a sailing boat, and you scrolling through family photos, and you know what I said, Jay? I said, fuck. I said, I should have bought that stock during COVID. It was $3. Dad told me it was no good. It went to $9 within 6 months.
So it
And
still happens to you, even you.
yeah, yeah, exactly. That's my point. And
Even
like,
Warren Buffett then.
I've yeah, I've heard him speak at annual, like an annual meeting. I think I don't know what the year was. It was in the 1990s, and they were like, "Oh, Warren, how do you invest and all that?" He was like, "I'll tell you not how to invest." Like I sold a bunch of Disney shares when they were much cheaper, and like it's the regret of not doing it, which is so much worse than the actual getting an investment decision right. I don't know. For some reason, you don't applaud yourself. It's just like that should have happened. But when you miss something or get something wrong, you have this great regret. The best way I cope with this, Jay, is that um, I think that markets are going to be open until I die plus some, and that there's going to be plenty more opportunities for me to make money in markets, and that effectively I just need to be patient and do my research, stick to my process, and many more opportunities will come. But yeah, maybe I reacted that way I did last night, Jay, because I was in 2020, I was still in high school, and I probably hadn't refined my process 100% correctly, and I had less money back then. So when you have less money, you want, I don't know, you just like trying to get more and get better and all that. And missing out on like a few $1,000s back then is really it's kind of really hurtful, and like I don't know, just like it was It was just in my mind, like it's in my head. It's engraved into my head. I can probably tell you about dumb stuff I've done in the share market when I was a kid and all that. I think it's because I had less money. So when you lost, yeah, you lost worse. But in the share market, you can only lose 100%, but you can make multiple times your money. So if you invest $2,000, you can the $2,000 can become what you said 2.4 million or whatever. But that's extremely rare, but it can happen. But then you can also invest $2,000, but you can only lose the $2,000.
This
So
is what
your
I was.
upside,
Well, go.
your
Sorry, go
downside's
ahead.
your downside's capped, but your upside's uncapped, and your winners should pay for your losers plus some. And the other day you had me on, I said Tom and David Gardner, they're from the Motley Fool, and they said it's best to pull out your weeds and water your flowers in your garden. And a lot of people with their share portfolios, they water their weeds because they haven't performed well, and they're probably not performing well because they. I don't know this. Like I not this is not stock specific. This isn't investment specific. Please speak to a financial advisor. But they're probably not performing well because the management teams in place are not doing their job properly, and they're probably not performing well because the company culture is bad.
Hmm.
So you want to invest in companies that the company culture is is performing well, and it's a good company culture, and people want to turn up to work, and the leadership team knows what they're doing. You can try to play a turnaround, but being a small investor, my experience with turnarounds is that you need a few bigger investors on your side with turnarounds, and they need to kind of get involved and get dirty in the business. If you understand what I mean, they need to be like some um, Warren Buffett, how he was at the start, a bit of an activist investor. They need to kind of shake the board up a bit.
This is why I think I personally should own YouTube based on what I said earlier.
But yeah, good luck owning YouTube. You're gonna have to fucking put a big offer in now to buy YouTube outright, Jay.
Yeah, thank you for the correction. Whatever is in
I
control
was
of
just
this
joking,
equity.
mate.
Um,
You're probably going to validate Berkshire's thesis, mate, if you're going to buy out YouTube within like a few days of them
this is the
purchasing it.
reason why I think it makes sense Berkshire would own it. YouTube has scaled the spirit that's made Berkshire the ecology that will be studied for 200 years. It'll be understood in the 22nd century. It will not be understood. That's why the Chinese are obsessed with it. It's the next ism, and they're way ahead of us as far as how to do capitalism because it's not capitalism. It's something else that doesn't have an ism yet. It's just like a
So you're
Frankenstein
all
of
saying,
capitalism. Wait, let me just finish that. So what I was trying to say earlier was every founder, because I spent half my life studying founders, the psychology and the psychology and the sociology of and the business ontology of founders. A founder is a content creator. Nietzsche said the visionary lies to himself, the liar to everyone else. The visionary takes a great leap of their of intuition and of psyche based on everything that they've ever experienced and they're beyond words. It's ineffable. And so they're a content creator. Every founder of a business is a content creator. They're creating a story. They're embodied in a story. They're communicating that with their speech, with the commitments they keep or don't, with their whole being. It's the business before it's an organizational chart. It's the organization of customers, a network, prospects, customers, a network, an ecology of, you know, potential employees, you know, enemies, frenemies. It's this whole ecology around the founder and um, of an idea. Okay. A content creator, pre these technologies, entrepreneur. Like if anybody wants somewhat grasp what I'm saying, study um, um, what is that? Economist Joseph Schumpeter, The Theory of Creative Destruction. He was like a visionary. He's another guy that I think will be reinvigorated in the next couple generations. So Joseph Schumpeter, very obscure. He's not Adam Smith or Marx, but so this is the content. What we're doing, right? We're content creators. This is content creation, but what is this really? It's all of the it's the same types of things that the business, the entrepreneur does, all of us with whatever medium. So my argument is generations from now, what are the businesses gonna what is business actually gonna be? What is business gonna look like? Way different than what it looks like today. And it looks like it's following way more on the individual. And then it becomes, well, how is hiring going to happen? Content creators and communities are what will move products and services of the future. So now all of this could be a bunch of hogwash, random late night thoughts. No, not in my, maybe I shouldn't even be sharing this if this is like my thesis or whatever. I don't know. I mean, I
You,
should own
you
YouTube if I believe what
yeah,
I'm
you
saying.
think YouTube's not gonna go away pretty much, and like,
You know how like the
because
data
you think
centers,
everyone's gonna,
NVIDIA is building
yes,
the foundation of all the data centers or the CPU,
yeah, but
whatever.
you think everyone's gonna move YouTube's way. Exactly what you're saying about the video. You think it's gonna move their way, so you think everyone's gonna try it. Like that's effectively gonna be a new age.
And YouTube is a foreshadow to like whatever the future tubes are. But my belief is that the businesses is moving business and the isms that aren't yet, those theorists don't aren't yet born. Berkshire makes sense to own because they tapped into the spirit of what I'm talking about. It's like the architecture of belief that Munger engineered and his general contractor managed. That is so abstract and multidimensional and polymathic. People don't they people the people that do it and try it, they're not talking about it, let alone on a podcast, and we don't even know about these people. And that's part of the spirit of what's made Berkshire so successful is the same aggregation and capitalization from a relational and institutional governance standpoint, principle standpoint as what makes a YouTube community so attractive. Why I donated, $500 to as a patron of Jonathan B's YouTube because I'm in the Berkshire funnel and I don't want my dividends and I'm getting value or what the impulse is behind the OnlyFans communities around people that do whatever they do on those platforms. They
OnlyFans a little different.
but the media might be different, but the human psychology is what it is. So I think business is the all business, the whole structure of business in 100 years will be different. And that's like, well, of course, right? Change is the only constant,
Yeah,
Heraclitus. Right? So anyway, but this is like all about just theses and having opinions and standing by them with conviction. It's like, well, how much stock do you own? Well, none. All right, well then shut up. It's your update, and I'm hijacking it.
I was listening to the Founders podcast yesterday. We can go for a walk around the garden here and not and not get to the topic. We can just keep talking. And yeah, Founders podcast. Who's the guy that's actually runs the Founders podcast? He's like he's great. I forgot his name.
Well, there's a VC guy like Jason or something or
No, no, the guy that
I,
actually like
oh,
speaks
I'm
on the panel.
sorry. I got that
Yeah,
totally
like it's
confused.
a black podcast, and he had Todd Graves on from Raising Cane's, and
I
multiple
don't know.
things like he multiple things stood out to me. And it was just so like, he had the Raising Cane's founder on, and like he was just insane, Jay, just insane, mate. Like he's talking about like in rush hour at Raising Cane's, it'll take 2 minutes and 35 seconds on average for the customer to get their meal once they've placed the order. And in not non-peak periods, it takes like 4 minutes and 11 seconds because in rush hour they're pumping out more food and they're just over. They're using more chicken than they had to, so they have spare for the next order. And he was talking about what's the best type of bird for the for Raising Canes, like how the bread needs to be toasted, all these like minute details. And he was talking a lot about staff and engagement with staff and why they don't work on holidays. And it was a really old, he had really old traditional values. When I spell old traditional values, like not values that we saw in the 90s, like values we saw in the 1900s, like don't work on holidays and all that type of stuff. And you're giving up to competitors, but his mentality around it was that like pretty much on holidays, like none of your workforce wants to be there because they all want to be spending time with their family and friends and having fun with their family and friends like everyone else is doing. And that creates a poor environment. Like it creates a really poor environment for your workers. And the founders guy, to touch on what your
Yeah,
point
after
is,
years, yeah, yeah.
the founders guy was saying, I forgot what his name is. He was saying that throughout he's read all the history of like Jeff Bezos, Bill Gates, the Rockefellers, all that stuff. And he said throughout history, to run and be a successful business person, the answers have always changed. That's the one thing he's found throughout history. And the business environment's always involved, and people have made money off changing and getting it right. And everyone's always told them that they were wrong because the world's not like that today. So there's the one thing that he's learned is that the world's going to change into the future, and you're going to need to be able to adapt really quickly, but you're going to need to be able to see the future a bit. And the future is going to seem like a joke to us now. Do you get what I mean? Like it's going to seem like very unrealistic. Um, and like that's like Jeff Bezos with books and Amazon and all that, right? Everyone, if you explain that to someone in the 1990s, they would have laughed at you. They would have been like, I can just go to a bookstore and buy my books. Why do I need them posted to me? And
Yeah, and
like
today
even like
we're spending, I don't know, more than our car lease on books. I literally, I've every day books come to the house, they get delivered to the house. I'm addicted as hell. We spend more money on books than our car, and we have
that's
a nice car. And
we found out right here why why Jay doesn't have a car on the Culture Matters podcast.
we're a one car
Spend all
family
his
just
money
so I
on
could have
books.
books. Yeah, I mean, you got
No, man.
8,000 books.
I wasn't
Sorry.
trying to embarrass you. I wasn't trying to embarrass you there, Jay.
No, you didn't. I
Effectively,
should be.
he
Maybe. I
Jay
was.
doesn't need a car. Effectively, in
I'm.
my opinion.
I'm very proud of that. So that I'm not embarrassed. Maybe I should be. I should be less proud, be more humble.
No, no,
But I'm
no.
sorry to
Like,
interject.
I feel like we should go away from this a bit and get back to
But
speaking
wait,
about
finish your
the
point
quarterly.
because that. What were you going with that? I'm sorry.
I was just gonna give it. I was gonna give another explanation. So the other explanation is like Blockbuster. If you told someone they needed Netflix in 1990, they would have laughed at you. But that stuff also makes the economy more efficient, boosts GDP because there's entrepreneurs constantly trying to cut corners. The business environment's changing because then that block that they leased at Blockbuster, that can go out to another entrepreneur. And because you can now watch movies, you pay a fee every month, and you can watch multiple different movies. It's more efficient. It helps more money circulate around because then the blockbuster person is not paying rent to to the person they're renting the block of land from. They're not having to pay a higher price for single use DVDs. and like, well, the consumer's not having to pay a higher price for a DVD they're renting for a day, and they're not having to drive their car back to the fucking Blockbuster because they've wasted fuel both times. It's just much more efficient, and Amazon's much more efficient than going to a bookstore. When you go to a bookstore, you're not going to be able to find every single book that you want, especially you, Jay. If you went to an in-person bookstore, you'd be screwed, mate, because you want all these weird niche books, and they're niche. The books you buy, they're not niche in like one topic. It's not like it's a niche sports book. It's like a niche philosophy book, a niche investing book, a niche like it's all these different genres. And Amazon was able to pile that all together and think of how to sell books in a completely different way. Like if we went into that, we would be talking for ages. And congratulations to Nick Sleep and all the investors that found it in the early 2000s and worked out that Amazon is effectively a really weird version of it's like a combination. I would say it's a weird version of Walmart. It's a really weird version of Walmart. It's a bit like Costco, but there's no there it is a bit like Costco now because there's that membership fee. You become a Prime member. I don't know exactly what happens there, but obviously you get their version of Netflix. You get you got cheaper
Well,
shipping
what happens?
services.
I could tell you as a active customer, it it comes faster. And dude, I was just talking to this with with the PBI guys. The app is improving. The company is still innovating and getting better. I'm like blown away the things that it can do versus last year even. I'm able to add things to a delivery that's already happening. They're pinging me and they're selling me. Like I'm spending more money because they're appealing to my identity. They're improving. This company is
Look,
improving, bro. And I was like, I want to make sure at least I own something because you know, at least from a
yeah,
psychological, I want to own what I believe in, and even if that
guys,
if less.
oh, oh, sorry, mate. I was just going to say, just because I think it's important for the listeners to understand what Amazon looked like in the 2000s. I was speaking to my cousins yesterday, and they were asking me what I do, and that was kind of funny to explain. We don't need to get into that on this on this forum. And then I said, one of my cousins said to me, because I was like, I searched for like businesses that are profitable, and there's an investment cycle in businesses, and they have to stop investing to effectively, for a multitude of reasons, to see if it works because you can't keep replenishing the balance sheet. And one of my cousins turned around and was like, has there ever been a successful business that's been listed that's perennially made a loss? And I said, there's like thousands and thousands and millions of duds that like failed businesses that have done that. I said there's one very successful business that's done that, and you would actually know the business, and it is Amazon. So from like in the 2000s, Amazon was all, and no one could work it out as well until I think around about 2006 or 2007, and still people were struggling to work it out in the 2010s, and then I feel like since 2020 everyone's caught on, but they used to perennially make a loss to defer profitability, and they used to intensely reinvest into themselves for future profitability. And that was good because they didn't have to pay tax, but they also was creating such a competitive advantage on all their competitors. Like no one else could touch them in the space that they worked in. It created a very extreme company culture, and yeah, I don't think many people would be able to do it. Hats off to the management team. Hats off to Jeff Bezos. But Nick Sleep, famous, like he found Amazon when it was that. So everyone just thought it was this fucking weird kind of fraudulent company. Like it's gonna like, how is it not running out of money? Why are people? How's it capital raising? And like, because it had capital raised. How's it? How's this company still going? Why do investors still have belief in it? There's a few people around here. Why is it still around? And I think Jeff Bezos explained to Nick Sleep, or somehow he worked out that effectively they were like they were going to be they were going to be like Costco without the membership. And he just had to figure out how to create a membership basis because he was going to create such customer loyalty and strength. Because like if you're online, you're probably going to buy something on Amazon rather than Alibaba. Um, and yeah, his whole idea works. So then instead of valuing it on net profit after tax, let's just make it simple for the listener. They value it on different metrics. Um, and they really fine tooth comb went through the financials and came up with their own, effectively what they thought profits would be if they didn't reinvest into this business so intensely. And yeah, he was a massive compounder for him. But there was multiple years the market just didn't understand what was going on. So then there was a kind of few year
That makes
period there
sense.
where the market understands what's going on, and this massive like catch up lag where they start valuing the business at what it should be valued at effectively. If it at what Jeff Bezos probably would have valued it at because it was a pretty weird valuation, but the valuation was fair and slightly undervalued because it's kept growing. It's still doing relatively similar stuff. It's profitable, but it could be more profitable. If it was if it was owned by private equity, it would be much more profitable on paper today than it is right now.
So
But
go ahead, sorry.
I was going to say, but its future growth would be pretty mid, like it wouldn't be that good at all, and profitability would probably start falling if it was owned by private equity.
So the variables of those that beat the market, they're not just smart. They don't just have the character. They're they are in business because they're in the business of capital for extended period of time, just like a company isn't the same 7 years in as it is 30 if it's still in. And maybe, whatever mathematical models they use, the average beats the active people is just because it's such a small minority that really outstretch the mean so much, but because of the infinitesimally small amount of those that check all those boxes, that are in it long enough, just like entrepreneurs weather storms, that have the intellect, like the innate capacities, and the character, because it's like character, content, capacity, time, and there's probably there's other variables I'm not thinking of. Like this, so there's so infinitesimally few of them that just absolutely crush, whether it's the Simons and Renaissance or Buffett and Munger or whoever else, Klarman. But there's so many that just don't, that averages it out where, all right, yeah, the average money manager doesn't even come close compared to the average because of cost of doing business. But life is about, and for the wealthiest in the world, finding the talent that are the best humans that are most trustworthy, that will be the best stewards of the capital. They'll be the best entrepreneurs in the capital world. Like so, like the Nick Sleeps, right? Or these him and his partner is like, and that's another thing, to temperament, to be that successful. They don't want your money. They don't care. That's another thing. They don't care and they don't want your money. They're playing a different game. They're not playing a money game. That's a lot of the paradoxes. They're playing some other game. Warren and Charlie, you know, weren't playing a money game. They were playing a different game. So,
Warren's
so,
just
so,
playing against
so,
himself, man. That's all Warren's been doing this whole time.
what'd you say? I didn't hear you.
He's just been playing against himself, I'm pretty sure.
I think trying to stay as sane as Carl Jung studying psychology to not become mentally ill like Friedrich Nietzsche. Yeah, he was just trying to keep himself sane. So I have a question
He's
for
like
you though. I have a
Usain
lot of
Bolt.
questions. What'd you say?
Like Warren Buffett's like Usain Bolt. Like he's like even I'm not talking about in a race. I don't think he'd be a very good runner currently, but like he's like that guy that's training at the track right now. He's just run 100 meters and he's put in a 10.1, and he's
This
sitting
guy.
there. He's had 70 years, mate, and he's sitting there and he's trying to put in a 10 point a 10 flat. But poor old Warren Buffett, the scale's getting harder every year. He keeps doing it every day. It's getting harder and harder. So effectively, he's just still trying to keep doing the same time, but he's pretty obsessive about it. And yeah, that's been his career kind of summarized. But he's been so much better than everyone else that he just keeps trying to maintain the pace, keeps driving the process. Yeah,
And
it's
so
repetitive.
many
It's like reps.
followers. So many of the followers probably could be better that but they're like dismembered slowly psychologically, like where, it's like they're told the two sides of the mouth, you don't need to be the smartest, but they know he is. So subconsciously it's just like, just let me just own old Berkshire and you take care of it. It's a lot. It's just a genius sales process, sales inception, and what a testament. But a lot of people probably could, if they apply themselves, be great in the space. It, in the with these variables taking place. I where what I want to ask you was Nick Sleep, right? You said Nick Sleep.
Yeah.
What What made them so great? What do you know? Like or what
I don't
do you know
actually know
much?
too well. I've read, I think I was reading Market Wizards or something. Can't really remember. All Monish Bry was talking about it a bit on some weird, obscure thing I was listening to or reading. I can't remember. Um, I know they were really big on being away from the crowd. They didn't. They never had groupthink. Um, their own independent decisions, their own independent research. It's kind of similar to every other investor, every other great investor. Like, let's not be seen. Let's just do the work. Um, like, make sure we can survive and they look at things like odds, like very, very, very differently to everyone else.
What was the other security in your report?
Oh, yeah, wow. We were talking about this, weren't we? So the other security was Modio. So it's a business based out of New South Wales, Sydney. Um, the CEO is Adam Cadwell. Probably stuffed up his last name, so sorry, Adam. Good guy. Anyone wants to speak to him, just go to the report, the annual report, or a quarterly report, or ASX announcement they've put out, and his phone number's at the bottom of the announcement, so you can just literally give him a call. Um, he's extremely passionate about the advertising space. He used to work for oMedia, which is the biggest advertising business in Australia. It is still listed on the ASX. They bought a business, Motio, the business he works for, bought a business from oMedia. Um, they vendor financed it for about $2 million. So when you're vendor financing a purchase, you're not paying for it up front. You're not getting debt from a bank. You're using the company you're buying it off. You're using their balance sheet, and you're saying we're going to pay you back slowly. So they were able to do that. They've paid oMedia off now for this advertising asset. They've run it extremely well. It's lifted profitability enormously. I've spoken about Modio before with you on the podcast, and I said I evaluate it effectively off EBITDA because they've got these massive tax losses. So
Yeah.
their quarterly was really, really good. I would expect them to make anywhere from $2.5 million to $3 million this year. That is a weird profitability metric because there's still that massive tax loss. So um, it's like it's how I would value it. That amount of money is going to come in effectively free cash flow. So yeah, anywhere from 2.5 to $3 million. $3 million is at the top end. I would probably say 2.7, 2.8. But we'll see. Yeah, I'm noticing there's screens everywhere I go now. Used to just be on the east coast of Australia, but I went down to a pub in Perth the other day for a catch up with the Brisbane Lions fans, and there was Mojo screens there advertising as well, and yeah, it's doing really well. I can't comment too much more on it, but effectively, they used to they had a great quarter, another great quarter, and yeah, I spoke about profitability, and that's pretty much it. I've already spoken about Modu in a past episode with you. I spoke about Harley Grocer and he's on the board, and yeah, I think we'll just stick to this today. And um, I don't need to delve too deep more into Modu because I've already touched on it.
Overall, market update. How, what's your, what's your temperature for 2026? Do you have
Yeah,
one?
I don't know. I'm probably not into the macro and all that stuff, so I just try to stick to the shares I own, think about those businesses going forward, stress test them. But if they had a crisis, how would they go? As I spoke about the free shares earlier in the earlier episode, I said it's really important that you have a strong balance sheet. It's paramount, so you can withstand any economic crisis we might have, and then you can obviously pick off your competitors as well. So I don't have any like massive bold predictions. If we saw a massive wobble in the market late next year, I wouldn't be too surprised. But yeah, it's kind of too
So a
far out to
lot of it
call.
is uh knowing, be paying attention, like any good competent CEO, paying attention, understanding where we've come from, looking at the future, communicating that, uh, and essentially sale like R&D. There's all this a list of companies you're researching, you've researched, you're staying in touch with, and you look
Yeah.
and see where's the money flow, and is there an opportunity to buy it at a price I can justify to myself and shareholders and feel good and sleep at night. And then
Well,
how
something
much
could
do you have to
happen.
rebalance your portfolio based on the capital's changing? Like if one goes so high and it's becomes the entire fund, you might say, "Oh God, maybe I should sell some just because it's a
Depends
lot
which
of
stock goes.
mental jumping jacks."
Yeah. Yeah. Depends which stock. Because if certain stocks become the whole fund in history, I run an investment company, so it's a slightly different structure, just from structures. But if a certain stock became most of the investment company's assets, I would be okay with, I don't know, would see.
The
I can never
psychology
say
is so
never
heavy for
effectively
that.
because you look at Berkshire. For many years, Berkshire was Geico it was Geico with an equity portfolio. That's literally just what it was. All
Well,
these people
yeah,
that are massively piling into Berkshire back when it was like back in the 70s, 80s. That's all it was.
this is where I
It
agree
was
with
really
Munger.
good business.
I just don't think the majority of human beings could have this psychological. Some of these things cannot be learned. An eagle is an eagle. A pigeon is a pigeon. They're different species. Now there'll be a hierarchy with a pigeon and a hierarchy with an eagle, but like Charlie's an eagle. So if I can't, and it's probably backwards. If I think I'm Charlie, I'm a pigeon. If I think I'm an eagle, I'm a pigeon. Even if I am an eagle, if I'm an eagle and I think I'm a pigeon, wait, now I just confused myself. Clearly, I'm a pigeon, but I just
You
it's a
you're
lot of
probably not an
backwards.
eagle and you're not a pigeon. Yeah,
These are
fuck
all
knows what you are, Jay.
I've been reading too much Schopenhauer. It's having an interesting. Um, what I would say is you're the guy. everyone listening to this needs to pay attention to you, uh, because the 50-year-old Alec, you have like that's a potential. Just keep doing what you're doing. It's very exciting to watch and see, and it's a wealth of I learned so much when we talk about this stuff, and I like where it's like this free flowing live with your update because it's so rich and exciting, and it's going to be exciting to see some of these companies mature into their potential, right? And then you're going to continue to learn more and synthesize, and then I guess a percentage of those companies that you stayed in touch with, as long as you're doing the fundamentals and you're waiting and you're in it, you're gonna see an opportunity from a million miles away. And then it's like
Yeah,
Druckenmiller, you have to have this like be able to go all in and do it.
they can just have a bad quarter. Like, sorry, not we don't really have quarters in Australia. We have halves, but they could have a bad half for various reasons. Sometimes it could be from overinvestment. Sometimes it could be a staffing issue. Sometimes a key customer could be struggling. Um, yeah, and you just have to, if you know the company really well, you then are more educated than the average person that's looking at the stock, and you know if they're probably what's then going to happen to the company if the company's going to be able to rebound from it, if the company's not going to be able to rebound from it. Um, yeah, that's pretty much it.
I just in closing, I think it's interesting the quote at the beginning about it's in the waiting. What my takeaway from this was the 6 years that you looked at a company and then you came into it. That was the first one we talked about.
Yeah, but shout out to Ben and shout out to Luke. I looked at the company, but I was just, I was a bit hesitant because you, as an investor, when you believe a company's not gonna, like, I don't know, there's a mentality, and it's like you believe
Well, you could still
it's
be
not
right and
going to
they could
be
be
anything.
wrong. You said about Nick Sleep and the protect against groupthink. I mean, maybe they didn't talk to anybody for a reason. You could be been right. They're wrong for the You're right for the wrong reasons. They're wrong for the right.
I was
You know
I was
what I'm
right at the
saying?
start, but then I think Luke just kept persisting, kept looking at it, and I was looking at a few other things, and then Luke was like, "Oh no, serious," because I thought it was a tiny bit of a joke at the start when Luke
But
first
how
spoke
did we?
about it.
How do you? What's made your mind change so much outside of it? It's in like what? Yeah, what? Maybe I'm not.
Because the momentum, the results were changing. There was a change in the leadership of the company, and
Understood. That can make a big
I
difference.
they had clear air because when I was looking at they didn't have clear air during COVID, and now they're not like in COVID they had so many restrictions on like just traveling and business in general, and now it's easy to get out to the US and to try to sell and get out to certain regions to try to sell, and it's just all easier. Your cost is like shipping costs and all that have all changed, and yeah, it's just easy to do business right now than it was in COVID.
Maybe is there another reason managements are so important for value investors? Because value investors that share values trust one another, and you could have eight honest people believe in one liar, and the one liar drowns eight honest people.
Yeah, I think that's more important from like modern day, like what you would determine modern day value investing. So some of my stuff, the management teams aren't as important because it's just so dirt cheap that I'm just saying it's going to be less dirt cheap. Um, yeah, but yeah, your point is correct. You don't like. I think honesty is probably like it's not that important. Execution's the most important thing. because a management, like a CEO, can believe what he's telling you, and they're genuinely trying to do it. But as a shareholder, you want to see results, so you want to see the management team's ability to execute. So yeah, it's important that you have a management team in charge that can execute. But obviously, if they're a liar, it's no, it's a no. But a lot of the managers you find, they believe what they're saying. They're just for certain reasons can't get it
That's what
done, or
that's
they're
why
incompetent.
I came to a conclusion for the honest liar.
Yeah.
The
But Jay,
fact
when you get paid
founders
a lot of money, you feel good. Do you get what I mean? Like if you're in one of these corporate roles and you're getting paid a lot of money, it can be kind of a suppressant that like you feel a bit calmer, you feel a bit safer. If you're like just trying to start up working like a minimum wage job and all that, you really like you're pushing. Do you get what I mean? Like we're gonna get this shit done. Like that's like Jay like 7, 8 years ago would have
100%.
been more like we're gonna get this shit done. I'm not trying to comment on
No,
what you
you're
are
right.
now. I think you're
It
fine
goes.
now.
It,
But yeah,
no, no, it's not. You're right. I'm not
seven, eight
fine
years ago,
now.
you could only get that shit done. Do you understand? Like
I'm
you were
not
like,
fine
yeah, this
now.
is gonna happen.
I When things go bad, right? Accountability reveals the degree of ability to respond, the responsibility. That it's relative, right? You could be, as Brad would always say, you'll be broke on another level. You're tapping into something very important about the psyche of the founder. Accountability, responsibility they're inextricably linked and they reveal everything. So uh that's why Charlie Munger said, you follow the incentives, I'll show you the behavior.
I'll show the outcome.
Yeah, the accountability and compensation and how people are compensated totally has an influence. And like when you have no, yeah, yeah, when there's no no other option, right? That burn the boats, it's beyond a mentality. It's like it's the ontology, the actual identity of the at every level, conscious and unconscious, that's impelling the start. And founders have to go through those struggles of the psychological the journey of the ups and downs of that. Like the bow keeps it's like you pull back the bow, you can't just have a target and have an arrow. You have to have the negativity, the pulling back of the bow, which is the tension. And then it's not just one release. Oh, I hit the target. Then you have to put a new heavier arrow in the bow, get a farther target, and pull it back even farther forever. The business is that's why Ray Dalio's principles is like the knot like that. That's an old idea that comes from Heraclitus, the philosopher king, who gave up his throne, gave it to his brother, and said, every 100 men, 10 of them shouldn't be here. 80 are nothing but targets. Nine of them are real fighters. We're lucky to have them.
And there's
For they make the
one.
battle all one. Only one is the warrior. He will bring the others back. The warrior, the CEO in that regard, is supposed to put the arrow, a heavy arrow, in the bow, find a farther target, and pull and be able to manage the suffering of the bow going farther and farther and farther back because that's the tension, that's the accountability. That the board is the accountability mechanism. It's part of that pulling, but it's part of the gravity that holds the arm in place as the bow is going back. What's making the bow go back? Competition, market change, innovation, all these factors out of their control. But so anyway, I get now I'm never gonna fall asleep. This is fun conversation.
Good luck.
Yeah, yeah. I'm gonna what?
Um,
Arena Securities, Aleck Arena, the man, the myth, the legend. Um, do you have any last word? Last.
you quickly touched on remuneration and that like higher remuneration can kind of sedate people. But there's two CEOs in the portfolio currently, and their remunerations now really, really high. But they've gotten results, and they've gotten results for a multi-year period, and they're currently still getting results. Um, so I don't have a problem with paying people a really high amount of money if they're really competent, know what they're doing, the best manager in the industry, and really switched on.
If you could tell me like their family makeup, where how they invest their money, where they don't, and get an idea of like how they live and then how they were raised, like what religion they do or don't prescribe to, or like all of the elements that, represent their identity, you can make inferences on like what their life could look like,
Yeah,
24 months, 48 months. And like that
the
type of
CEOs,
intel. I wonder who if people go
they're
into
not
all that.
buying
I'm sure.
cocaine and doing like that stuff. Like you, like
Well,
I
yeah,
don't
there's
know
like the
what they're.
common sense stuff, but it's death of a
I
thousand cuts. There's a lot of little things that can deviate.
oh my
What I'm
God,
saying, right? You could have somebody that gets
yes.
paid not enough that does a terrible job. Somebody gets paid overpaid that does a great job, and because there's other factors that play
You're
into
touching
it.
on death by a thousand cuts because this is like, talking about quality. If the quality slips, you're fucked. And I was yesterday when I was listening to that podcast, the Raising Cane CEO, like Todd Graves or whatever, the co-founder, he said the amount of times people have come to me and said, Todd, if we just use this lettuce, it's like a bit cheaper than the next lettuce. And he's like, yeah, but does it taste as good? Are these tomatoes, are these the best tomatoes we can actually get? And he said the reason like they try to remain high quality is because they want their experience to be craveable. So it's I need to come back to Raising Cane's and buy chicken. So you're effectively once you've had Raising Cane's, there each customer is a source of recurring revenue. Or to keep profitability higher in the short term, they could just sell cheap. They put cheap shit in their food, and it will affect the quality of the product and it will then affect the consumer, how the consumer feels about the company. He said, I don't want to be the most profitable fast food place. I want to make it, I want to leave my consumer with the best experience when they eat the food that we're better than KFC, we're better than Chick-fil-A, that they're better than Five Guys. So people come back to us. Sorry,
I
I've
think
gone off on a
I
tangent,
think
but it's all
Charlie
about quality of product.
I think
And you're
Charlie
talking about these
Munger
managers and this quality of product.
I
The
think Charlie
shareholders don't
Munger
see. Sorry.
dude, there's no apologies here. This is the best episode. I don't know why. No, I'm having a good day. That's why, and this is a fun way to end the day. I think Charlie Munger died with a lot of regret because I think what his genius was doing everything but investing that led him to invest in Warren Buffett and Lee Lu. Like he did all the leading indicators of a genius investor: architecture, reading, fishing, conversation, the salons of the elegant, like the Renaissance, gatherings, all the different playing game, answering the phone when his investments called him, which was Warren and Lee Lu, like having a family and a life beyond it. He did all the leading indicators that make a great investor, because they're the things the invisible. Nietzsche said the invisible threads are the strongest ties. What I think he messed up was I don't think he fully believed in himself at some level. Like he didn't take enough risk, and it sounds crazy because
You
he's
realize
the
no,
risk
Charlie
guy.
Monkey like blew himself up.
Yeah, maybe he never
He
recovered
ran a
from
fund and it was
it might have been the first loss of his first kid in his marriage, and he just not never got over whatever, maybe he blamed himself for his first kid's death. Who knows what it was? But what I'm trying to
he
say is
definitely blamed himself for his first kid's death.
he died with regret because he knows he could have been, if he picked Warren and Lee Lu, he could have picked Elon and all these others. What I'm saying is, like Charlie would have been the guy that picked Elon Musk and was because Elon Musk has a mentor named Larry Ellison, who is a genius, but he's not Charlie Munger. He doesn't have the character. He doesn't. And what I'm trying to say is, if Charlie was fully, if Charlie this is like the weekend quarterback. I'm the weekend quarterback here, right? The Monday quarterback. Charlie, and I'm saying this so we could learn, right? And stand on the shoulders and see farther. Charlie was that good. I have that much love and admiration for him. He could have, in another universe, he picked Elon Musk and his wealth surpassed Warren. I know you didn't care about that. He probably did, but I just think Charlie was that good, but in all the ways, right? With all the frameworks, all the things, and like in a sense, he was like the Ben Graham, and there'll be future Charlies that stand on his shoulders. And I think he could have died a lot richer and more successful if he had more
But
balls.
that's not Charlie Munger, dude.
Okay. Balls isn't the right
That
answer.
wasn't the
That's
Charlie Munger
not the
that
right, that's
we.
not the right way to explain it.
He was always.
He,
Sometimes you just get
yeah.
to be fine with being the number two, bro.
I agree with that completely. Yeah, completely. Um, that being said, he was playing a different game than the general contractor. So he was a number two in that context, but in the greater meta in the greater meta theme, he was not a number two, he was a number one. He was a number two in that context. He was a fucking number one. He's like the number one
We're talking
of all
about
the number
basketball.
ones. Charlie
Like
is
you
like
said,
the the David, you know.
okay, so they were playing with two number twos. Sorry, they were playing with two number ones. But Jay,
In that
like
context, he was the number two for sure.
in the 2000s, yes, but he was number one. Like I
Lee
get it.
Lu showed that he's number one in his
No,
own.
Charlie and Warren were both number ones because in the 2000s, Kobe played with Shaq, right? And they won multiple championships. Kobe's like in the GOAT debate, for most people, he's probably higher than Shaq. He's a better player than he is. But at that time, Shaq was the better player. And Kobe could have been selfish and been the number one, but that probably means they don't win as many championships together. So sometimes you have to realize that this person's better than me at this point in time, and you have to step back and support. I think Charlie Munger found someone we thought was better than him, and he was like, I'm just going to support them.
I do
It's a
not
big
think
part
it's
of
a better.
Berkshire.
I do not think it's better. I think it's complementary, and I think they are not the same species. They're a complementary species within a genus. Okay, if I'm using that word, they're complementary. It's like it's um it's not a no. It was not. He's better. It's we're different and complementary. And after 50 years, Lee Lu demonstrated that in a different medium. So, very different business model, same same constitution, psychology, but in different mediums. And what I'm trying to make a proposition is that in the space between the engagement with the Warren and that relationship manifesting itself and the 50 years or 60 years between that and Lee Lu, Charlie actualizing his full potential because he was playing a different game than everyone else. Um, could have had Elon and a bunch of other. And I say, Elon, what the hell are you saying? Elon. Elon, I think, represents that new iteration of like of entrepreneur. Um, 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 he could have had more of them because he was that good. And I wouldn't compare him and Warren. They weren't playing the same game. Charlie doing his fund was like a means to an end to get him the capital to be able to do the game that he was destined to do because he read so broadly and he experienced life in so many different domains. It creates a different it puts him in a different paradigm that's a complementary and necessary paradigm that makes that what it is. And he was the number. That's it. He was definitely uh the number two. I don't even know if maybe number five. I mean, but doesn't even he's not even a
But
number. He's like
he could have been the great, like, he could have been like in the argument for greatest investor of all time in his own right if he went out by himself. In my opinion, I think he was that talented. Like he wouldn't have. I
agree
don't
with
think he
that.
would have been better than Warren Buffett, but he probably would have been top five, top 10.
It's a catch 22. Agree with that. It's a catch 22. I think if wait, how's I said I we better rain check because I gotta go to bed. I just realized that I gotta get up in a couple hours for this flight. Um, Interesting. Good update. I'm excited. Yeah, Australia.
That's good, mate. Okay. Is that how we're gonna end it? Yeah. Okay. Yep.
No, no, you should
Maybe.
end it. It's the Arena Securities.
Oh, okay. Yeah. So thanks for all listening to the Arena Securities quarterly report, and we did get lost and talk about a bunch of random founders of very successful businesses along the way, and talk about Amazon, and yeah, we probably just did that because we thought they were all brilliant examples, and you guys learned something from them. So, yeah, should be should be a good next podcast, I reckon. But until then, that's it.
If you're listening to this, please leave us a review on the Culture Matters podcast. Reviews are how we grow the platform to bring even more value for you. Please leave us a review on the Culture Matters podcast. Go listen to episode 1038, Aleck Arena, Rob Miller, amazing interaction. And we will see you next time on the Culture Matters podcast. Thank you.
Thanks for having me, Jay.